Good morning, good afternoon, good evening, depending on the part of the world you're in. This is Jonathan Satovsky of Satovsky Asset Management. And on today's episode of Seeking Wisdom, Wealth, and Wellness, I want to talk about small value companies. Why do I want to talk about small value companies? Well, a lot of academic evidence points to the fact that this market of really tiny companies representing less than 2.5% of the total market. If you concentrate in this little sliver of the world and you close your eyes, there has never been a 25-year period that you wouldn't outperform the markets by a pretty good margin. Now that's history. Going forward and in history, you have to realize that I say over 25 years. So that means over time, not all the time, but over time. There are periods of time, 1, 3, 5, 10, 15, even 20 years that you can underperform the market owning the smallest value, cheapest companies in the marketplace. But what's interesting is it's over time, not all the time. Yet when something isn't working, even though intellectually you know it makes sense that you have more runway and more growth when you're starting from a small base and growing large, we're human nature. Human nature is so, everyone wants to be independent, but it's hard not to want to be with the crowd. As I think the famous Jean-Marie Aveyard said one time, he said, when you find something out that no one else knows, it's really cold away from the herd. Then the herd comes your way and you're like finally validated. And then you're like, you know what? I don't want to be near the herd. I want to get back into the cold again. So think about that on your path to wisdom, wealth, and wellness. Good luck.